Raubex has released its first half results today. HEPS up 3% to 95.7 cents and revenue increasing 7.7% to 2.81 billion rand. Joining me now to unpack the numbers, Francois Diedrechsen is the CFO rather at Raubex. Thank you so much for joining me, Francois. Let's look at your main revenue generator right now. You're looking at Roadmac rather. Overall, you're looking at margin pressure there. To talk to us about the environment in light of that space where it's kind of a light rehabilitation for roads and of course surfacing projects there.
It's nothing really new in that division. It's been going on for 3 years. Roads is sort of the place with some action, so it enticed everybody to come into that space. Margins have felt it over the last 3 years, but it looks like it's stabilizing at these levels. We've had a few competitors that have fallen by the wayside. In our views, the strong will get stronger and the weak are going to die, and I think we're in the throes of that. I think the next 12 months will be more of the same. And, we'll see where government is with the trillions they want to spend on infrastructure thereafter, if it's time to tick up at that point.
Yeah. Overall, though, do you feel we're at the bottom of the cycle? Is it easy to tell what's to come in 2013?
No, it's not easy to tell, and it's not a clear answer. I'd like to say that we're somewhere around the bottom of the cycle. It's difficult to say it's right there, but our view is it's stabilizing at these levels. The question is rather how long is it going to stay there before there's an uptick. I think the results are good given the conditions we're in. We're comfortable, you make money, but I don't foresee an immediate uptick from these levels. I think we're going to be here for a little while.
Raubex was one of the companies that was impacted by the issues with the Free State provincial government and the projects that they had there when it comes to infrastructure. You've managed to settle that. We're starting to see that. We have seen that reflected in the numbers. Going forward, does this dampen your appetite to take on projects in the public sector?
No, well, we building roads, we work for the public sector no matter where we're working. But what will be different, that specific example you're referring to is where we actually effectively funded the government. Will we be doing any more of that? Unlikely.
So how does that basically change your strategy when it comes to those funding models?
Well, we won't be funding them. We'll work on tender as we do for SANRAL and various other provinces and countries for that matter of fact. There's always an element of funding from our side, and we've got to fund the working capital. But we won't be delving down a road where we actually fund the entire project for a government. It was a long, tedious process.
Yeah, and you have managed to revise that, and you come up with a revised payment plan, so that is out of the way right now.
Yes, we've settled with them, and then there's a payment. There's money due in November and some in March, and then it's finished. We've completed the work. A little bit of a case of, I guess, both parties being equally unhappy with the settlement, as settlements go, but it's done and dusted, and it's behind us.
You talk about the fact that you've got a stable order book, 5 billion rand, and your approach to taking on new projects is very cautious in light of the fact that it's a low margin environment. Operating margins sitting at 10.8%, that's of course group operating margins. What is the cutoff kind of operating margin that you wouldn't consider a project when it comes to key projects?
I think we're pretty much there. I think this
you wouldn't go anywhere below 10.8.
As a group margin, obviously it's varying between construction and Roadmac in the surfacing department and the mining work we do and the quarrying work. The answer is not the same across the space, but across the different divisions in the group where we're currently operating, much lower, and we're not comfortable to be tendering.
We see a lot of construction companies that are sitting with negative margins. Do you find that in the industry right now people are prepared to make a loss to not give up that market share?
Yeah, well, it's clearly been happening for the last 2 years, and hence you've had some competitors of ours that have fallen away. You've got a natural business pruning process taking place, attrition is happening. You can only work for losses for so long, and then you're not going to survive. So that is not our strategy. We're there to make money, or we don't want to do it.
You've mentioned, of course, Africa, a big priority area for you with all the construction that's going on. Revenue, in fact, dropping back 45%. Very project dependent, given big project 1 year and that, of course, falling away the next. Healthy margins there, 19.2%. So what is the expansion strategy right now? Have you got any key projects in Africa?
Yes, we're tendering in numerous countries, ongoing all the time. Africa's slow and steady. It's no fireworks. If you're running their boots and all, you're going to come back without a shirt. So you've got to be fairly careful.
So where's your next big project going to be?
It's tough to elude, but we are tendering in numerous countries. Where there's political stability and where the country has some money, we're always there. And I can assure you the teams are tendering in a handful of countries on differing sizes of jobs, etc. From North Africa to SADC. So depending where we hit success, that's where you'll hear us be next.
Well, best of luck. Thank you so much for joining us, Francois.